Hello and welcome to Trading Hour live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always, Hormiz Fatakia and Reema Tendulkar. Good morning, guys. Well, we started off the show with some green, but suddenly Nifty has slipped into the red as well. Nifty is off 100 points of the day's high as well at the 25,087 mark. Very individual move that we are seeing today. So be it Eternal, which is surging in how after a good set of numbers and management commentary as well. We'll discuss that in greater detail. We do have Titan as well, which is reacting to that acquisition that they have done. And banking names, HDFC Bank, ICICI Bank, they are in the green. They continue to be in the green after the results that they reported over the weekend. So a lot of moving parts today. In terms of sectoral movers, we have some pressure which is coming in from the PSU banking name. So watch out for that one. 0.6% gone on that index. Nifty Pharma as well is down 1%. And a bigger cut or an underperformance coming in from Midcaps today. So the Midcap index down almost a 200-point decline is what we are seeing there at the day's low as we speak.
Indeed, there has been a bit of a turn in sentiment in the first 1.5 hour of trade. The benchmark indices, the mid-caps, all at the day's low, and the advanced decline ratio too has turned in favor of the losing side right now.
You know, it was the question always was today that whether we would be able to, beyond HDFC and ICICI, whether the index would be able to sustain. And the answer has been no as of now.
But they're sustaining.
They're sustaining.
HDFC Bank and ICICI Bank are still sustaining their gains.
For ICICI Bank, it's a record high today. So, 1482, the record high that it made. HDFC Bank too is now very close to its record high of 2027. So, keep an eye out on both of these names, although both of them have come off the highs of the day. So, that is something that you need to keep in mind. Of course, there are a lot of other results that you need to keep an eye out for. We'll just get to Eternal and Swiggy in just a bit. But if you take a look at some of the other result reactions, Latent View numbers came yesterday. The stock is up 5% in today's session. India Cements was down yesterday after its results, is now up 3.5%. The big number of today, though, to watch out for is Paytm. 3% higher on that stock at the highest point of the day as we speak. Not at the highest point of the day, but yes, 3% higher. And the stock from its February 2024 low, which was around 300 rupees, is now up almost over 3x. So in anticipation of a profit that Paytm could report this time around, considering the fact that it reported a loss due to a one-off last time around. So yes, Paytm, Dixon Technologies is the other one that you need to watch out for.
Dixon, I was just checking. So this time, I think they're expecting about a 90% top line growth. For the last 4 quarters, Dixon has been reporting a 100% plus kind of a revenue growth. So that's been one growth juggernaut, and it continues to roll. This time, it's not 100%, but very close to that, 90%. Though margins are still around the 3.84% kind of a mark.
Yeah, it take 90% any day.
Any day.
You set the
But they say, right, revenue is vanity, bottom line is sanity. So
but yeah, margins
that improvement will be important.
Keep an eye out on the margins as well. They're likely to decline on a sequential basis, although they're expected to remain flat on a year-on-year basis. But the bigger story from last evening was Bajaj Finance, and that is because its MD and CEO Anup Kumar Saha tendered his resignation just 4 months at the helm, and Rajiv Jain has been redesignated as the Vice Chairman and Managing Director. Now, several reports have emerged thereafter on Saha's potential next stint, and Ritu is joining in with more on this. Ritu, where is Anup Kumar Saha likely to be headed?
Well, Hormaz, I wish I had the answer to that question, but at this point, what I can tell you, it could be too early to assume that Anup Saha resigned from his position as the MD of Bajaj Finance to go and take over the top job at IndusInd Bank. Now, remember, we were the first to report that Anup Saha is among the 3 candidates who are in the running for the top job at IndusInd Bank. And while his name being in the mix may have had some bearing on internal dynamics at Bajaj, we understand that the RBI is yet to clear the name for the IndusInd role. So the idea that he quit specifically to join IndusInd could be a bit premature. But that said, the resignation itself has come as a surprise because he was being groomed for the position for the last 18 months or more, and he only took over as the MD in April, and then him quitting the role in just under 4 months is bound to raise questions. Equally important is the fact that Bajaj Finance's long-term MD Rajiv Jain, he's back at the helm and he's going to serve as the MD for the remainder of his term until March of 2028. Now, while that arrangement is going to provide a smooth transition for Bajaj, the focus is also going to shift to succession planning. Now, remember, Rajiv Jain has spent more than 15 years at the helm of the company. Now, while there are RBI rules that limit bank CEO tenure to 15 years, there's no such cap on paper for NBFC. So technically, Rajiv Jain can continue, but the company nonetheless will be under pressure to groom now the next line of leadership. Now, Jeffries points out Rajiv Jain will also have to pull back from any advisory role at Bajaj Finserv, focus full-time on Bajaj Finance as the MD. Morgan Stanley also calls this a setback to the succession plan that the company had been executing, but says with Rajiv Jain back at the helm, the situation seems manageable.
Okay, take that point. Important story that we'll be tracking very closely. Thank you so much, Ritu, for joining us with all those important details. With that, let's move on to the other stock of the day, Eternal. Post its commentary and numbers, and other stocks to try and focus on the back of that. Mangalam is joining us with all those details now. Mangalam.
An incredible set of numbers coming in, but more importantly, it's the management commentary which has the street fairly excited. The couple of things that had kept the stock under pressure in the previous few quarters. One was increasing competition in quick commerce, and that as a result of which impacting their overall quick commerce profitability. And second, the slowing down of growth in their food delivery business. Both these concerns were assuaged by the management and were reflected in these numbers as well, where there was stability in the growth rate of food delivery business, which came in at 16%, and the quick commerce business as well saw quarter-on-quarter improvement or reduction in losses. And that's where the management as well went ahead and said that food delivery growth has now bottomed out and they will recover from the slowdown. And secondly, in the very near term, quick commerce, if the competition stays the way it is, they will only see margin improvement from here on. So the worst of margins are behind that as well. And the third major driver for growth for the company will be District, which is the going out business, which will be a near $3 billion business annually, at some point in the next 5 years, with nearly $150 million of adjusted EBITDA coming in on that business. So not only were the numbers good, the management commentary was good as well, and that's where the brokerages followed. So we had positive commentary coming in from a whole host of brokerages this morning, be it something like a CLSA, which has a high conviction outperform rating. We have Goldman Sachs, Jeffries too has upgraded the stock to buy. They have a target price of 400 rupees. And on the back of Zomato's up move, we're also seeing traction on some of these other listed new age players. So direct competitor is Swiggy. If the industry is going through a good patch and is likely to recover from here on, and Swiggy is investors are betting on will benefit from that as well. Remember, Swiggy currently trades at a 45% discount to Zomato on a price to sales basis. So the street may be betting for that discount to narrow. The other stock which is doing well is InfoEdge. Understandably holds about 13% stake in Eternal, and as a result of which their value now stands at nearly 38,000 crore rupees, which is roughly 40% of InfoEdge's own market cap.
Thank you very much for that. Jeffries today has upgraded. CLSA has retained its high conviction outperform with a target price at 385. So ticking the right boxes, growth remains strong, competition pressures appear to have peaked, and this stock is higher in trade, significantly higher. Get into a break. We'll come back and talk commodities. Manisha Gupta joins it on the other side.
Welcome back. Some bit of selling pressure creeping in on the index now. We are 40 points lower compared to where we were at the start of the show, and now holding on to levels of 25,050. So at the lowest point of the day is where the index currently stands. But on the positive side, some of the other movers, of course, Mangalam highlighted Swiggy, InfoEdge, Emcure Pharma is the other one. Almost 5% higher on that stock. GMDC is continuing to move higher on the news of that rare earth developments in the country. So 3% higher on that stock today as well. And some of the other movers on the downside, 361 WAM, that's down at the lowest point of the day. A block deal took place just after market open, and that stock is down 7% in response to that. So shifting focus to the commodity space, Manisha is here with us now, and she's here to talk about how precious are precious metals today.
Thank you for that. Well, overnight was a great market. You saw gold prices gain up by 1.5%. We are trading at around 5-week highs right now. Silver gained up by more than 2% as well and trading very close to its 14-year highs in the international markets right now. Well, gold not too far away from its all-time high of $3,500 an ounce. And we're looking at a renewed support coming in from the fact that the dollar index is now slipped below 98. There is a 60% expectation that you could be looking at the first rate cut happen in the month of September. And then apart from that, there is very strong investment demand. ETF buying was at record in the month of June, continues to be supportive as well. And the street is also looking at strong central bank buying that has just about continued. So overnight, we did see the gold prices go to $3,400 an ounce. Slight mild profit taking is what we are looking at this point in time. But when you look at the global banks and brokerages, they're all very, very positive going forward in case of the gold prices there. 3,500 is what most of them believe. Actually, when you look at the overall chart there, Citi is the only one that expects the prices to decline below $3,000 an ounce before this year ends. Rest everybody else expects the gold prices to go back to its all-time high. UBS talks about 3,500. CIBC is the most bullish, talking about $3,600 an ounce in the second half of this year. You also have JP Morgan talking about 3,675. Bank of America says that once 3,500 is breached on the higher side, you could be looking at 3,800, and an extreme scenario can take the prices to 4,000 on the higher side as well. Morgan Stanley talks about 3,800 in the fourth quarter of 2025, and Goldman Sachs talks about 3,700 by the time this year ends. So not only are all these banks and brokerages talking about 3,500, which has been an all-time high, but prices above and beyond that as well before we end this year. So bullishness continues.
Okay, so bullishness continues. That's about precious metals. Thank you, Manisha, for joining us with all those details. Let's get a technical check on the markets now. Mitesh Thakkar is joining us for just that. Mitesh, good morning. Thank you so much for joining in. Well, we've seen that fall from the highs in the Nifty. It's close to the day's low as well. What is the next important level we'll be watching out for? Will we consolidate at these levels, or we'll see more pressure? Tell us more.
So on the index, my belief is that we're still, trying to consolidate. Holding on to 24,900 yesterday was important. I think as long as we're above that, good chance that we'll do 24,900 to about 25,250, 300. And post this consolidation, I expect some kind of an up move. Only if we start closing below 24,900, that's the when, you will look at possibly lower levels.
What
about stocks?
Yeah. So on the stocks, Divi's Lab, I think even the Pharma pack is looking slightly weak technically. So Divi's Lab is a sell. Keep a stop at about 66.45. Look for targets of maybe around or below 6,500. And that apart, I think on the long side, I do like some real estate names. So I have a buy on Godrej Properties after a good rally. Today is giving some kind of a pullback. So try to enter around 23.50, keep a stop below levels of 23.20, look for targets of around 24.20.
What about Eternal, Mitesh? The stock of the morning, possibly. You still await a better entry point? Run up too fast, too soon?
I see one. I have some positions over there, so there's Western interest. But I believe that, Eternal, the highest ever weekly closing which the stock gave was around 302, 303, and there was also one weekly closing at about 298. They were, one was in September 24, the other one was in December 24. I think you will see when the stock hits all-time highs, there's some profit booking. So that's why the stock is off the day's high. But once we get a weekly close about 302, 305 zone, then I think the stock is heading towards 340, 350 as a minimum, and maybe even more.
All right. Thanks, Mitesh, for joining us with those picks. With that, we'll slip into a break. When we come back, we'll be joined by the management of DCM Shriram to discuss their Q1 numbers. Stay tuned.
Welcome back. Markets are blinking red and green, but it's got a downward bias as the morning has progressed. The Nifty is at the 25,069 mark, and Reliance Industries is one of the culprits, perhaps, for this pressure that you are seeing. Reliance Industries has slipped to the day's low and is down close to about 1%, adding to the fall that it had yesterday, which was about 2.5%. But the company on our radar right now is DCM Shriram. Remember they have interests in many sectors: sugar, fertilizer, chemicals. They have a windows, they manufacture windows and doors, which are sold under the brand of Finesta, and lots others. Now, they came out with the Q1 numbers. It was a steady set of numbers. Revenue saw an uptick of 12%, margins expanded. To talk about the quarter gone by and the outlook, Amit Agarwal, Executive Director and Group CFO at the company, is now with us. Thank you very much, Amit, for joining in. So just to get the big picture in and the outlook for FY26, I think last time you spoke about a revenue growth of 10 to 15% and margins in a wide range of 11 to 14%. Is that on track? Could you narrow the margins a bit? Would you be closer to the upper end, lower end? How are the next 3 quarters likely to shape up for you?
Yeah, I think the trend that I had given, or the range that I had given the last time, we're pretty much on track. We expect a little bit of upward bias, probably in Q3 and Q4. So yeah, we are pretty much on track.
So upward bias on revenues or margins? I mean, could you narrow it down on top line and margins?
Yeah.
The first half, second half, full year.
Yeah, so see, we have been investing in growth over the last 3 to 4 years. If you see, we have made significant investments of about 4,000 crores in various growth initiatives. Those growth initiatives have started yielding results. Even for the Q1, if you see, majority of the top line as well as the bottom line growth has come from the investment. So that's all volume driven largely. So we expect that to continue, and therefore the numbers in this financial year should be better. And on top of that, we have a steady pipeline of investments. We have done 2 acquisitions in last 2 to 3 months, and we are exploring more. So I think there's a good pipeline which would lead to the growth of overall business, and therefore we will see good top line and bottom line numbers.
Okay, so you are saying that you'll be growing 10 to 15%, something that you had guided for before, and margins as well between 11 to 14%. Amit, the big talking point has been the ADD on PVC. When is that likely to come? Has there been any discussion on that? And what would price increase be once that ADD imposition comes in? How would that impact your company overall?
Yeah. You see, on ADD, Supreme Court did give a positive judgment where they stayed the order of the Gujarat High Court. And now the Ministry of Commerce is working on studying that again. So we hope something to come in next 3 to 4 months. In terms of the impact, I think the prices should go up by about 5,000 to 6,000 rupees per ton of PVC once the ADD is imposed.
Okay.
Amit, good morning. Thank you for joining in. In our previous interactions, you've mentioned that a large part of your bottom line going forward is likely to be driven by the chemicals business. But with the volatility that you have mentioned in the caustic soda prices and the fact that you are expecting them to continue to remain volatile going forward, how is that likely to impact the chemicals business and overall your bottom line as well?
Yeah. You see, what has changed vis-a-vis last 2 years and is that our cost structures are much better. Therefore, our cost of production has come down by about 14 to 15% in last 1.5 years. And that's a big plus for us. As far as prices are concerned, they will be range bound. So that range can be anywhere between 27,000 ECU per metric ton to 32,000. That's the kind of range. So which is we are quite comfortable, given that our cost structure has improved significantly. And then we are growing on volumes. So I think a lot of these factors are playing out well for us.
You spoke about the 2 acquisitions that you closed recently. I think DNV Global Private Limited, which helps in backward integration of your Finesta brand, that's windows and doors. And you've also signed a definitive agreement for 100% acquisition of Hindustan Specialty Chemicals Limited.
Yes.
How much will these 2 add in the coming year? What was the rationale? And you spoke about exploring more acquisitions. So what's the cash in the books and what are you looking by way of M&A in terms of adding to your portfolio?
Yeah. So in terms of these 2 acquisitions adding to our top line, so their existing capability is to add anywhere between 300 to 400 crores to the top line, both these 2 acquisitions put together. But then, these are small, and our objective of taking up these acquisitions is to grow these businesses because we always wanted to get into these businesses. The idea was whether we do organic, and which will take us about 2 to 3 years, even to reach that 300, 400 crore turnover. But now we are getting that jump start, and we can grow from here. So I think these will take, let's say, 2 to 3 years to be, really big and adding significantly to our top line. But then we have made a good start. And then in terms of cash available in the books, I think the way we look at our businesses is that what is our debt to EBITDA? Currently, debt to EBITDA is around 1.1, which is very healthy. And therefore, we have enough cash on the books to do acquisitions.
Got it. Amit, one pain point in the business has been the sugar business. Say, be it the macros, be it the conditions that the industry keeps seeing. This is one business that continues to be under pressure. Do you think at some point in time you will demerge it and unlock value in the remaining business? Also, in terms of ethanol blending, what is the maximum limit which is permissible for ICE vehicles now?
So, see, what the government's plan is on the blending is 20%, which they have almost achieved. And what we hear is that they plan to increase the blending program from 20 to 25 and then take it up to 30. So, which is a positive for the industry. But I fully agree with you that sugar and ethanol, the way it is regulated and way certain regressive measures are taken by, either the center or the state government, it does trouble the business. But we are taking a little different approach. We are saying, how do we really strengthen the business on a more sustainable basis, whatever is in our control? So we are working more aggressively now with farmers to increase their yield, which would mean more consistency of sugarcane for our plants. Because, we are probably able to operate at 80% capacity utilization, given that the cane is not good enough or it's coming down. And also working on the recovery, which is like what is the sugar content in the sugar cane, working with farmers to improve that as well. So I think we would like to work on the cost side or in this business more aggressively than what we have been doing till now to improve the health. That is one part of it. And then we are looking at certain other things, what we can do in this business, which are add-ons to sugar and ethanol, like we did CBG very recently, which is like we commissioned in March. And now it is operating at 92% capacity utilization. So probably we have capability to do a couple of more CBG plants. And few more thoughts are in pipeline. So hopefully this business should be healthier going forward, but not immediately. I think this year I do see it, maybe at same level last year or a little bit under stress.
Amit, does those lots of thoughts translate into potential new product launches as well? You'd mentioned that you've launched 8 new products. What is the kind of incremental revenue you're expecting from these 8 as of now? And is there or are there any further product launches that are lined up, if not in the first half, in the second half of the year?
Yeah, so this is regarding our agri inputs business, Shriram Farm Solutions. So if we see in last 15 months, we have launched close to about 70 new products in our crop nutrition and crop protection category, other than seeds. Seeds is a regular life cycle where we keep launching new products. Now here, out of this 17, we are getting good revenue, but then it takes time to ramp up these volumes of the new products. Now, if we look at the product that we have launched over the last 3 years, so the total revenue from the new products out of the total revenue that we have in this business is almost about 20%. So which is quite healthy if as a benchmark to have 20-30% of your revenue coming from new products. And our endeavor would be to increase this and therefore we are ramping it up further in terms of introduction. So like as I mentioned, 70 new products in 15 months, out of that 8 were launched in Q1. So we will have a good pipeline going forward as well.
All right, take that point. Amit, thank you so much for joining in with your thoughts and the outlook going forward. That's the word coming in from DCM Shriram. They maintain their FY26 guidance and talk about new launches as well. And that sugar business could either be flat or could actually see some pressure in FY26. We'll slip into a short break now. Up next, we'll discuss the market fundamentals with Jyoti Vardhan Jaipuria, founder and MD of Valentis Advisors.
Welcome back. Well, the index continues to remain where it is, still 30 points lower. But pull up Dixon Technologies reporting results today. That stock is trading was at the last check was down around 0.6%, still hovering around those 0.5% worth of losses. And it's been quiet over the last 2 or 3 weeks. Has seen a bit of an up move of around 5%, counting down to results. It'll be an interesting number to watch out for later in the evening. But let us now go across to Nimesh, who is standing by with an interesting data on how the change of guard at various companies is now leading to their re-rating. Nimesh, tell us more.
We've discussed in the past as well that normally when we see a leadership change, it's a case of a re-rating for the stock as well. So I've looked at the data since the start of 2021, and this is a BSE 500 data. Across the BSE 500 companies, more than 100 companies have seen a change of guard in the last 4-5 years. And interestingly, more than 20 companies have seen a stock price reaction between 30 to 200%. So that's the kind of reaction you see in the stock price or the re-rating that you see in the stock price. But there are some companies which have given more than 200% return as well in the same period. So I'll start with that list first. The first stock on my list is Persistent System. Look at the kind of reaction to the stock price. The stock is up 850% since Sandeep Kalra took over as a new MD and CEO in October 2020. 850% in the last 4 years. That's the first stock we've seen a big reaction there. Next in the list is, no, this is not Persistent System. The second on the list is Newgen Software. They got a new CEO in 2021 and the stock has reacted 285%. The third on the list is Himadri Chemicals. That stock is up 500% since the new CEO came in 2022. Again, a big move there. The next stock is Zensa Technologies. Even the company saw a new leadership change in 2023, and since then the stock is up 275%. These are the few names which have rallied between 300 to 800% in the limited period of time. So that's the kind of data which proves that a leadership change leads to a big re-rating. Remember, this is the BSE 500 data. If I look at NSE, one stock which will stand out for me is Bombay Stock Exchange. It's only listed in NSE, and we've seen a massive reaction to that stock price as well, but that doesn't show up in the data. So now the question is, will the history repeat itself? And that's something to watch out for. Which are the few companies where there has been a leadership change announced, and can that stock see the re-rating in the near future? The first on my list is HUL. A woman CEO now, Priya Nair, has been appointed as a new CEO on July 10. So need to see in the next few quarters whether you see a big re-rating in the stocks like HUL. The next stock is Cyient. Even Cyient announced a new CEO in February 2025. The stock is still not reacted, but we'll have to wait and see as to what the strategy is for Cyient going forward, and will the stock react or re-rate further from here on. Titan, we all know that there is going to be a fresh change of guard from January of 2026. Across the various verticals, you're going to see new CEOs in Titan as well. So Titan will be the stock to watch going forward. Across, as I said, watches business as well as jewelry, there are going to be new CEOs there. The next on my list is Cyient DLM. Again, they've appointed a new CEO in July 1st. So again, fresh appointment, but we'll have to see whether going forward, even that stock re-rates or not. And the last but not the least on my list is Max Financial Services. Sumit Mandal has been appointed as a new MD and CEO of Axis Max Life, which is the insurance arm of Max Financial. They're going to see a new CEO from October of 2026. So again, massive changes are happening, and we've seen big reactions to the stock prices as well. History suggests a change of guard leads to re-rating. So we need to see if there is a fresh change of guard in many companies.
Okay, all right, interesting point there. But a reminder for our viewers, unlock a world of exclusivity, expertise and influence. Become a member of CNBC-TV18 Access, our premium members-only experience on CNBC-TV18.com. The membership includes access to CNBC-TV18's flagship events, interactions with our journalists, along with curated studio tours, e-learning sessions and masterclasses, and curated lifestyle benefits as well.
I take the market conversation forward now with Jyotivardhan Jaipuria of Valentis Advisors, who's joining in now. Jyoti, good morning. Thank you for joining in. What have you made of the earnings season so far, at least for the IT companies that have reported so far? Well, they have been flattered to receive, if you could say that. You still have Infosys reporting results tomorrow. But what about the others, the banking names, the HDFCs and the ICICIs? They have delivered on their numbers. The other private bank was a disappointment because of asset quality concerns. The mid-sized banks face margin issues. What do you make of the banking numbers so far?
Yeah, so when we started the earnings season, expectations have been low. Generally the if we take the consensus numbers, the expectation is we'll do like a 5% earnings growth for this quarter. And so far, if you take the aggregate of the results which are coming in, they're more or less in line with expectation. That if you strip out all the extraordinaries, which is what we tend to do, earnings growth has been flat to like slightly up. Like you said, some of the banks have done better, but there again there was expectation that the NIMs will be lower because of the interest rate cut which we have seen. And given that expectation, banks have more or less met the earnings expectation. Again, if you look at the IT names, generally everybody was expecting it to be a very soft quarter with guidance also being muted, and that's the way it has really played out. So no major surprises or disappointments, but it's been like a lackluster expectation which is getting met. We're not really seeing any big surprises coming through.
You're saying earnings have been flat to slightly up, right? X of any exceptional items.
Yeah.
Okay, but that's still lower than the expectations, right? Which were in mid-single digits. You said 5%.
Yeah, so but what's happened, Rima, is like the tech companies have come in at the banks. So banks are actually going to drag earnings for this quarter because most of the banks are going to see a drop in NIMs. And because of that, banks actually are contributing negatively to the earnings growth for the quarter. So we've had the banks come in. Some of the other ones which are probably going to be stronger are yet to come in. Like Pharma will be probably double-digit growth, so will chemicals, so will cement. So some of these numbers, as they come in, this will probably boost up the average a bit.
Okay. Jyotivardhan, I wanted to understand about these big management or leadership changes that are happening across the board, right? And you just heard Nimesh talk about that as well. There's something happening at Bajaj Finance. Then we are also watching out for that announcement or IndusInd CEO. What is your take on this entire process or this entire change that comes by? And in that case, which stock do you think tends to benefit the most out of the ones that Nimesh mentioned and the others as well?
Okay, so I didn't really hear the full thing which Nimesh was talking about. But in general, leadership changes quite often lead to a change in where the company is going. And that's why it's treated positively. If you look at banks, across the world, whenever there's a leadership change, what you find is that initially the new leader tends to do a big write-off in the first quarter where he takes over, or the first 2 quarters where he takes over. And then, he's got a clean slate with him. So then, things start to look very good for him over the next 2 years because he's done a lot of the write-offs on the doubtful debts. So in general, we've seen leadership changes across the world being taken positively by the market because there's a fresh change which comes in. And, ultimately for us, we do track, especially in the banks, when the new CEO going to come or when the existing CEO's term gets over, because that is one indicator of what you really want to do. It may cause some short-term uncertainty on who takes over also.
What about Zomato or Swiggy? Is it a part of your portfolio? Is it a must-have? I know valuations are prohibitive at these levels. I think Zomato is at 70 times forward multiple. But what is the thought process behind these companies?
So, Rima, for us, most of these high valuation, it doesn't fit with our philosophy because we generally tend to have the CU's philosophy where we want the undervalued stocks which are underperforming and undiscovered type of stuff. So we don't really own a lot of these platform companies. In general, we think all of these companies will grow much bigger than where they are today. It's because, more and more habits are changing of the consumer. And so people want to order in home. And this is platforms that proved like a good way for them to order in home and get the dining experience without really going out to dine. But it's what you pay for it, what the stocks are valuing today. And on that measure for us, we are actually very, very conservative on valuations.
What about Pharma, Jyoti? Because you're counting down to the August 1st deadline when it comes to tariffs. And there have been a lot of news flow with regards to a lot of these pharma names, be it Glenmark, be it Wockhardt. Laurus is at a 52-week high as well. What do you anticipate this time around? Do you believe that this quarter will be able to justify the kind of moves that these stocks have seen despite a potential headwind that's coming in a few days from now?
So, I would be very happy if the tariffs are frozen in the US. Because, what has been dogging the stock, if you see a lot of them which are not performing, it's just the fear that we don't know what the tariff is going to be. because somewhere there's a mention that it could be as high as 200%, which I don't think is going to happen because, ultimately the US consumer will have to pay a lot of that 200% tariff. So, if we get a closure that we know this is a tariff, it gets easier to, calculate some impact on earnings. And so we know that where the stock should be valued. The uncertainty has been hitting a lot of the US generics. So if you see, pharma has been into two. The US generic companies have actually not done well over the last few months, ever since the tariff talk started. But the rest of the pharma has continued to do well. It's a sector which we like. So, we'll be very happy if we get a closure on the tariffs, because probably some of the US generic names will look interesting after that. We like the CDMO space because that's something which we think has got a multi-year growth ahead of us. So pharma is something which we like, and we would probably buy more if we can, get some closure on the tariffs coming through.
Okay, all right. Take that point. Thank you so much, Jyotivardhan, for joining us and taking us through your sectoral picks, or in terms of the market moves going forward as well. Thank you so much for joining in. Time for a short break. We'll get you more on the markets on the other side. Welcome back. Well, markets continue to be under pressure. So if we pull up a Nifty that is lower in trade at the day's low, actually, it's a 34-point cut that we are seeing right now. And the broader market movers as well. A lot of pressure there, 4% gone on the mid-caps as well. So let's talk about some of those movers. Tata Power shares, they are in focus. There's some update on Mundra Power Plant. The Section 11 news has come by. Vivek is joining us now with more details and explaining what that means for the company.
Well, that's right. Companies, including Tata Power as well as Adani Power, will be in focus. This on the back of the fact that the Ministry of Power has not extended Section 11 for imported coal-based power plants beyond 30th June 2025. So basically, companies that have power plants in Mundra that were importing coal from Indonesia and which under the Emergency Act of Section 11 were operating on a cost-plus basis now will not be able to get the benefits under Section 11 anymore. So for Tata Power, what does it mean? Tata Power has immediately shut down all 5 of its units as far as Mundra is concerned, and it's a maintenance shutdown since the first week of July itself. A whole host of brokerages have reacted, and they've tried to make sense and assess the impact on Tata Power on the back of this particular important development. IIFL says the key reasons for this particular extension not happening is, number one, likely due to the absence of peak power shortages in this particular year, and also the government's keenness to, instead of having a short-term PPA or a cost-plus basis, the government's keenness to go ahead and push for a long-term PPA. So what they're saying is that they're estimating almost 5 to 8% potential hit to their FY26 PAT estimates. They're also estimating a close to 100 to 150 crore PAT impact for each month of operational loss. Axel Capital says that the management remains hopeful of a permanent solution to the Mundra PPA for procuring states in the near term. They believe that the company can recoup the plant availability factor charges if the current shutdown is limited in the range of 1 to 1.5 months. JM Financial says that they expect the company to go ahead and tie up PPAs with the 5 states, including Gujarat, Maharashtra, Rajasthan, Punjab, as well as Haryana. Mundra operated at a PLF of close to 65% for FY25. Again, this particular loss can be mitigated, number one, if the company gets an emergency approval or an extension within 1.5 months, or if there is a long-term PPA solution.
Thank you very much for that. Let's talk about Ultratech Cement. Came out with numbers yesterday during market hours, but the conference call was post-market hours. Nigel joins in with the management comments.
Well, the comments that came in from Ultratech Cement on the con call actually is encouraging for the industry on the whole, because the core growth in terms of volumes for Ultratech as well as for the industry are rather subdued in the first quarter. However, Ultratech is saying for the year they'll grow by close to around 10%. The street will like that number. So volume growth they're expecting to perk up in the next few quarters as spending does ramp up, government push as well does back them up. So that's on the volume. Second, on the pricing front, they're saying that prices in the month of July actually are holding steady in comparison to June. In fact, it's mildly higher in South India as well as in East India, which is very encouraging. Though North as well as West is more or less flattish. But pricing, even holding steady in the monsoon season, actually is telling you that maybe the worst of competitive intensity is a little behind, and the street is willing to look ahead. So we'll see how that goes. But for the time being, that's very encouraging on the pricing aspect. Next, on South India, they're saying South India is in a good space. It's going through a bit of consolidation. It's in a good space. And they also made this comment that South could be the new North. Because remember, North has been the outperformance. Now they're saying South could be the new North, which is encouraging sign on the pricing aspect yet again. Moving to India Cements, they're saying India Cements that's been making losses for the last many quarters. They turned it around in this quarter, and now they have their eyes set on 1,000 rupees per ton of EBITDA per ton by 2028. Thumbs up out there. On their capacity, they're saying by the end of this year, they'll be around 212 million tons. But watch out, because they're going to make a big capex announcement at some time during this fiscal. So that's going to be, a highlight, because what kind of money are they putting on? Where do they see their capacity headed as well? And finally, on the capex front, for the year, they've earmarked 10,000 crores, out of which 2,000 crores has been spent. So give and take everything, the commentary on demand, on pricing, on industry as well is positive. So that's why you're seeing some of those cement stocks actually are taking heart from this commentary that we've got. And on Ultratech, most of the brokerages, they maintain their positive view. And for a couple of them, it's the top buy pick from the cement space.
Top buy call, indeed. All these brokerages have raised their targets on Ultratech. Nigel, thanks a lot for that. Take a short break. More on the markets on the other side. Steve.
Welcome back. Midcap index is down 250 points, but look at GMDC. That's soaring to a fresh 52-week high. Stock is up 6.5%. McLeod Russell is locked in an upper circuit, 8%. Only buyers on that. Digitide Solutions is up close to about 6.5%. Late revenues tech, Ixigo. The travel platform has been clearly the stock of the month after it came out with numbers. It came out with numbers at the beginning of the month, at the start of the earnings season. And this month, it's seen a rally of close to about 30-odd%. And AGI Greenpack, we spoke about it. The numbers were strong. Revenue growth of 22%. Profit jump of 42%. And that stock continues to gain ground, 10% up on that. It's time now for a special segment, Quarter Se Quarter Tak. We'll get you the expectations from each sector. And now we'll put the spotlight on the pharmaceutical sector. Ekta joins in with the key expectations.
Well, for pharmaceutical stocks as well as healthcare stocks, expect a steady quarter. Now, for pharma companies, you are expecting around a 10 to 11% growth in revenue and a growth in EBITDA, which would be similar this quarter, along with profit between 5 to 10%. Now, expect the US growth for generic companies estimated at around 3 to 4% Q-on-Q. Growth X of Revlimid generic would be something to watch out for. Now, overall growth in the US would be led by stability in US generic pricing, volume growth in existing products, and a pickup in recent launches. Expect lower Q-on-Q sales in Revlimid generic for companies such as Aurobindo, Cipla, Dr. Reddy's, Sun Pharma, according to analysts, as price pressure increases. Now, for Sun, watch for the specialty portfolio growth. That would be the key thing to watch out for. For Biocon, watch for growth in the biosimilars portfolio. Now, the range for domestic growth is wide, anywhere between 8 to even 16%, according to some analysts. Now, domestic-focused firms such as Torrent, Ipca, Alchem expected to see good growth this quarter. And watch for commentary on Torrent's acquisition of JB Chemicals. Now, most API companies are likely to see a volume uptick this time round, with an estimated 8 to 9% growth year on year. Expect over 15% growth in some CRDMO companies, driven by the likes of Bluejet, Divi's, Loris Labs, Sai Life Sciences. While Syngene and Piramal Pharma could probably see a muted quarter due to inventory destocking on key molecules. Now, moving on from pharmaceuticals to the healthcare front. On the healthcare front, expect around a 20% growth in EBITDA, driven by over around 20% growth in hospitals and around 10 to 11% growth in diagnostics as healthcare companies recover after a softer Q4. Apollo Hospitals might see continued impact of international patients slowing from the likes of Bangladesh. Commentary on the recent restructuring will be watched. Expect steady margins for the likes of Dr. Lal's. Watch for recent acquisition integration for Metropolis, which has been on an inorganic drive. Now, let's leave you with the valuations. First, for the pharma stocks, as you can see, Sun Pharma ruling the roost, most expensive, along with a couple of others such as Divi's Labs. So a lot of probably the good news is factored in. For diagnostics, Dr. Lal's as well as Metropolis, FY26 PE stands at around 50 odd times. And finally, for hospitals, the likes of Apollo Hospitals and Max ruling the roost in terms of valuations.
All right, take that point. Thank you so much for joining us with what to expect from the pharma space, Ekta. But let's talk about individual names now. Mahanagar Gas will be reporting its numbers today. Now, do remember the stock is up 17% year to date and is the cheapest in the CGD space as well. It trades at 12.6 times FY27 EPS. A lot happened in this sector in terms of lower APM gas allocation, these players going ahead and increasing prices as well. And that is exactly what will be impacting numbers as well this time. So while revenues are expected to grow by 1.5% this time around, EBITDA is expected to grow by 6%. Margins almost flat, or maybe say 100 basis points increase, 21.1% this time. And profits are expected to be up 6.5% for Mahanagar Gas. This time around, the volume growth, that's expected to be flat on a quarter-on-quarter basis. And that explains the muted revenue growth as well. It will be up 9% on a YOY basis. So what will happen here is CNG volumes will grow by 4%, but PNG volumes will fall by 4%. So that is something which will neutralize the volume impact, but pricing is something which will aid revenues this time. This time around, EBITDA is expected to grow by 6.5%. That is muted versus the earlier quarters because remember there was lower allocation of cheap gas or the APM gas to the entire sector. On the flip side, when they import LNG, so the spot LNG prices, those came off, and that will aid EBITDA or support EBITDA to some level. And also the price hikes that they had taken in the month of April, that is something that will support EBITDA as well. So overall, it's expected to be a muted growth this time around, and that was led by a lot of macro factors, so to say, that will impact the earnings this time around for Mahanagar Gas.
We keep an eye out on them. One of the first among the first of the city gas players reporting results today. Yes, we keep an eye out on this and possibly set the trend as well for the rest of the industry. The other one, the major one reporting results today, other than Paytm, Dixon, MGL, is Colgate Palmolive, and Mangalam is here with what the street is expecting from them. Mangalam.
Well, you've seen, a lot of these companies do extremely well from the staples side. Colgate, unfortunately, would not be one of them because the stock already has corrected about 40% from the peak, trading at 40 times, and this time around numbers aren't likely to infuse much confidence as well. Revenue is likely to decline by about 0.5%, EBITDA decline by about 2.5%, and the net profit declines by about 3% as well. All in all, you're looking at a bottom line of close to 350 crores on a top line of 1,500 crores for Colgate. 0 to 2% volume growth in the toothpaste business, 1.5% decline in price mix due to promotional density. Rural, which contributes about 40% of the company's revenue, recovery out there important to track. Remember, in the previous commentary as well, the management had said they see only gradual recovery, and that too is likely to happen only in the second half of this year.
Thank you very much for that. And what about UBL, Mangalam, United Breweries?
United Breweries is likely to be a good quarter, and that's largely because of a couple of factors. One, it's normalized operations. Seasonally, it's a strong business quarter for them, for the business of beer. And secondly, the raw material prices have been fairly stable as well. So all in all, we are expecting a good growth coming in the overall business. The stock has seen a correction of almost 12.5% from the peak, trading at 57 times. Closer to double-digit revenue growth is what the street is anticipating this time around, with nearly 20% plus volume growth coming in from the premium and above business. So you have about 11% revenue growth. The EBITDA grows a lot faster, so over 30% growth. So the street is anticipating out there in terms of margins, 13% EBITDA growth, and the net profit as well would be in focus. 11.7% is the margin that the street is working with this time around. Two things that will happen. One, Telangana has taken a price hike, so that would be a positive. But on the other hand, Karnataka has increased excise duty, so that would offset. That explains why, despite an 11% revenue growth, margins would be stable at around that 11.7% mark itself.
Okay, all right, take that point. Mangalam, thank you so much for joining us with what to expect from UBL and Colgate. But we have completely run out of time on this edition of Trading Hours. Stay tuned. Halftime Report is up next.